Amoheni. He is a tax analyst, and also Mr. Michael Sego. He's a chief financial officer, and we'll be joined also by Professor Patrick Assuming, who is an economist and a senior lecturer at the University of Ghana Business School. These are the three individuals I'll be speaking to this morning. But let me start in studio with you, Richard. Good morning.
Good morning.
How are you doing?
We're doing great.
Right.
We're doing great.
Great.
Getting the numbers, we can project. So we know what's going to happen in 2026.
Amazing. So great. We haven't spoken in a long time. I hope everything has been good.
Yes. Has been a bit of trying to satisfy a lot of clients on trying to look at what we can do for 2025. So
right.
Yeah.
Okay, great. I know you've been traveling outside the country. Doing a lot of things.
It's all work.
You don't want to get into those things.
It's all work.
All right, great. And I think I have Michael also with us. Mr. Sego, good morning.
Good morning.
How are you doing, sir?
The Lord is my shepherd. How about you too?
I can't say any other thing but also say what you just said. The Lord is also my shepherd. All right, great to have you. I'm sure we'll be joined by Professor Assuming very soon, and then we can have other conversations. But maybe let's start off here, and I'll start in studio with you, Richard. At a broad level, how would you describe the posture of the 2026 budget? In terms of consolidation, relief, or even growth?
Okay, right. So this budget, I've looked at this budget. I've also looked at the 2025 budget, and I see a lot of consistency. So this budget, it appears a much more consistent budget, and also gives a government a posture of being consistent, continuing from what they left or what they are leaving in 2025. So it gives me a bit of kind of assurance that you can actually plan with this budget. This budget, what's actually also going to do is that though it has a lot of ambitions in it, although 2025 we were able to achieve all the targets. There are a lot of shortfalls in the target, but it appears that the finance minister has figured out what went wrong, and then you actually want to correct it. And then also a kind of budget that is going to look at raising a lot of the revenue from internally, and then it did not introduce new things. In fact, if you look at this budget, the issue of tax, it was expected because the finance minister had already hinted about it. Right. So it was quite expected. And that's what I'm saying, that this budget is quite consistent. So it's quite expected. But if you look at it, it means that a government is not going to introduce new things in this budget, but it's going to strengthen the existing structures to be able to operate this particular budget. So that's an overview how it is. And it's going to be budget, revenue is going to go up, and expenses is also going to go up. The big picture agenda is also sits within this particular budget. The capital expenditure is going to be the 3.6% of the GDP is actually also going to be up. But a lot of the revenue is going to be financed by tax and the internal generation of it. Look at it, there's not a lot of external generation so much, but a lot of internal generation. So it's going to be a bit stretchy for local investors or the citizenry to be able to contribute more to this particular budget. Yeah.
Very interesting. You mentioned a lot of things. You've thrown in a lot of things, and maybe if I want to stay on that for a few minutes, let's look at them one after the other. We can't go through all of the things you've mentioned, but you are saying that this budget is something that can help businesses plan. How do you mean?
One thing about finance is consistency in the variables that you use to plan. So if I plan that I'm going to make a profit, I'm going to make a profit of 20%, and it is because there's going to be an X amount of inflow, all right, and those inflow depends on 25 customers, 26 customers, and they are consistent over time. You'll be able to use that to plan. Okay. And if the customers change over time, every time, the 26 change to 10, it means that amount of revenue that you plan, you cannot. Okay. This is why we're saying that this budget appears consistent, right? Okay. So even a lot of investors who we intend to spend within the last 3 months of the year, since 4 months or 5 months ago, they knew that there's going to be an issue of a relief within the taxes, and therefore they can actually project January 2025, 26, all right, so that they can take advantage of the reliefs in taxes and reduce their tax burden. So that's what we actually say. And when you read the budget, it has been consistent with what the minister has been talking about for time, what the government has been talking about for time. So before this budget, this is one of the budgets that you could have easily predicted what the minister was actually going to say. All right. That's why we say it's quite consistent.
Okay. All right. And one of the things you also mentioned was that we haven't met quite a lot of our targets. Which targets haven't we met? If you can help.
In 2025, you wanted to raise a tax revenue of around 176 billion Ghana cedis. We are within 154 billion Ghana cedis currently. Okay. We also wanted to.
But the year hasn't ended. There won't be any magic.
Actually, the last part of the year in 2022, the last quarter of the year helped government to achieve the target. The reason is that the exchange rate skyrocketed, and therefore the little revenue that were coming from forex, it's also skyrocketed. So it enabled government to achieve the revenue target. And then if you have actually played the Q1, Q2, Q3, and you are presenting your budget after the end of first month of the Q4, it means that you should be able to have a very good projection of what's going to happen in the Q4. That's the last quarter of the year. Okay, so that is why we can actually say that. So we could not achieve a lot of our revenue target. The only revenue target that was actually achieved or exceeded was revenue from NHEAL, that's a national health insurance levy, and then the COVID, and then not the COVID levy rather, but the Get Fund levy, which exceeded by 16% actually. So this is what the only one that we were able to achieve. We couldn't achieve our target for PAYE. We couldn't achieve our target for VAT. We couldn't achieve our revenue target for CIT. We couldn't achieve our revenue target for all of them. The MNDA's revenue also went up a little, okay, although we couldn't achieve the target. So all these revenue targets, and even to the extent that our external source of funds that we were looking at, the grants also went down by about 47%. If you achieve 47%, our oil revenue that we are looking for like 12 billion Ghana cedis within the year 2025, we are running around 5.7 billion Ghana cedis. It means that about 52% reduction or underperformance. So it means that you actually didn't achieve a lot of your revenue target. That's why I'm saying that this budget is ambitious. It's ambitious because you did not achieve a lot of your revenue target for 2025, yet you have increased your revenue target for 2026. You also increase your economic growth from 4% to 4.8%. So that's why I'm saying that it's ambitious, because if you look at what you have achieved 2025, you did not really meet your target. Okay. And then it isn't that you made it marginally. You made it quite material, quite significant. All right. And if you're looking at raising revenue of 224 billion Ghana cedis, and you could not raise that revenue of 224 billion Ghana cedis. You wanted to, and by this year, you want to raise a revenue of 268 billion Ghana cedis. And you want to make an expenditure of 302 billion Ghana cedis. So if you have this background and you still are able to be bold enough to make such a projection, it's quite an ambitious one. But you can say it's quite, I say it's still ambitious because despite the underperformance in your revenue target, you are able to make this budget, but you are able to make an attribution to what actually led you underperforming. And that is why I say it's ambitious. So what is actually going to happen is that government is really going to count their losses and also count their underperformance and what made them underperform, strengthen them. So if you check it, the government is looking at digitization, going to look at AI analytics. The government is going to look at making the revenue collection robust, all right, so that they'll be able to collect the revenue. This tells you that government have a good understanding that the money that he was looking for is already sit in the system, but he was not able to collect it. So he's going to make the system much more efficient so that can to be able to collect it.
I mean, I think that is something that we've known for quite a long time, that the money is here. But we haven't put in place the systems to be able to actually collect the money, and we keep burdening the quote and unquote the faithful few. Yes. But we'll talk a bit more about that. But let me go online and speak to. I understand that Professor Assuming has joined us. Prof, good morning. Hello, Prof. Hello.
Sorry. Good morning. Good morning.
Yeah, Prof. Good morning. How are you doing?
I'm doing well. How are you
Mm.
doing?
Yeah, I'm doing very well too, by God's grace. Thanks so much for making time to join us this morning.
Sure.
All right. Okay, so please hold on for me. I want to speak to Michael and then I come back to you. Mike, are you still with us?
Yes, I'm with you.
All right. Yeah. So I want to pose the same question to you. How would you describe the posture of the budget, of the 2026 budget? Do you think it falls in consolidation, relief, or growth?
Okay, so just as was earlier mentioned, you would realize that coming from 2025 to 2026, in 2025, the finance minister and by large, the government told us that its focus was to stabilize our economy. And you could realize that the various mechanisms that were put into play helped because just before the reading of this budget, we realized that we are hovering over about 8% of inflation, which has brought inflation to a single digit figure. And also, we also realized that the exchange rate is around 10.65, which compared to last year around the same time, where it was around 14 cities. You also notice that the commercial bank lending rate has also dropped to about 21%. Now, this the government called stabilizing the economy. Now, in 2026, you realize that whatever methods that were deployed in 2025 did not change much in 2026. What I see the government trying to do is trying to capitalize on the stable economy it has created, giving confidence to investors to create a more enabling environment to investors. So when you look at this budget, what the government is trying to do is to try and encourage investors to get into the economy, invest capital into the economy, whether they're going to borrow it at a cheaper rate or they're going to use self-generated funds, they should invest. That is how come the government is also reducing the taxes. Because when the taxes are reduced, you realize that the cost of operation for businesses are also lowered. Cash flow is also put in the hands of private investors to be able to invest more money into the market by so doing, raising the GDP of the economy. So I see budget in totality as a budget that is setting itself up for growth and for the creation of jobs and also economic transformation. So the government is gradually moving from stabilizing the economy to growing the economy.
I see.
Because you realize that
Yeah.
it has even
Go ahead.
it has projected that it is estimating 4.8% growth in our GDP. You understand? So it tells you that its focus is to capitalize or leverage what it was able to do and grow on it. So you will see that still the government is trying to employ fiscal consolidation by trying as much as possible to raise its revenue and also try to manage its expenditure. So you realize that the expenditure that was stated in the budget were targeted at specific industries, and it was strategic. And these industries or sectors are sectors that are supposed to help increase the supply of goods and services in the economy. So if the supply goes up, then because of the reduction in tax rates for household and for business entities, the purchasing power of of Ghanaians also go up. You realize that with higher demand and higher supply, the equilibrium will be at a higher level than we saw in previous years. So strategic towards growth. That is how I see.
You see that. Okay, right. Let me come to Professor Assuming. Now, Prof, the finance minister actually described this budget as resetting for growth, and Michael also believes it is towards the same direction. From an economic standpoint, is the environment truly ready for a growth agenda? I have seen other economists actually say that, hey, let's sustain the let's keep it stable, or let's still go on the path of stability instead of growth. What do you think, Prof?
Yeah, well, I think you really want to, the stability has to be maintained. No two ways about that. But stability is not an end in itself. And if you look at where we came from, even as recently as 2023 or 2024, I think a lot of progress has been made, all across the board, all the major macroeconomic indicators. There's been relative stability. But you have to also understand the political reality that you can't say, I'm going to spend 2 or 3 budget cycles only to achieve stability. The bottom line is that there will be elections in 3 years' time, and the government has to make sure that, it's delivering on the promise. If all you focus on is stability, eventually people will tell you, well, we are not going to eat stability. People need to benefit from the stability.
Right.
So I think what they are trying to do is try to achieve a balance. First, make sure that you maintain the stability, and then build on the stability to ensure that you are creating jobs and there's growth in jobs. So I think that's, from that context, you have to understand the balance, and it's a delicate balance, but I think that's what the budget tried to do.
Right.
To what extent will it be successful? Well, I think we have to wait and see. I did hear earlier on my co-panelist saying about the ambitions in the budget. I actually thought that, especially for the real sector indicators and the other macro indicators, I thought that the government was actually being modest. Because if you look at the fact that inflation, for instance, has come to 8% already, essentially what they are trying to achieve for next year is to maintain the inflation at where it is. Now, if you look at the debt, the fiscal deficit, now we have a fiscal public financial management act that says that we have to achieve a primary surplus of 1.5, and that's essentially what is being maintained.
Yeah.
But even the overall deficit, they are still seeking to reduce it further. So, I think it doesn't seem like overly ambitious. I understand his concern about the revenue underperformance, and that's true. But you have to understand that what this government did, every time you couldn't raise the revenue, it didn't spend. So it made sure that even when the revenue is underperforming, the deficit is not growing, because whenever the revenues are not coming, they refuse to spend.
Okay.
And so, but the bigger argument is, okay, you are doing these VAT reforms, bringing effective VAT rate from 21.9 to 20. How are you going to plug the hole, and how are you going to make sure that we are getting the revenues, and how can you set a higher revenue target? If you look at the previous budget, projections of the previous budget, including by the previous administration, if you look at the 2024 budget, there was a projection of what the revenue from VAT will be in 2025 and 2026. And then if you look at the 2025 budget, it projects into the medium term.
Yeah.
There's not much difference. There's only a slight decline in the projection of the VAT we plan to collect from the previous years, even with the reform that are being undertaken. One thing where I sided with the finance ministry is trying to improve the compliance. There is something we call VAT effort. So VAT effort looks at, the actual amount you are collecting versus your potential. So if you look at Ghana's case, the potential, they will use your tax laws, they will look at your tax rates, and they look at other parameters and run regressions and project what your revenue should be. And then look at what your actual collection. Ghana's VAT effort is very low, even compared with our peers in South Africa. And over the weekend, I'm sure you've seen a report by the IMF saying that, in terms of revenue performance, we are doing way below our target.
Yeah.
And much of it is not because we don't have the tax, it's the enforcement, and the compliance. So when the finance minister says, I'm going to leverage technology, digital platforms, and AI to try and boost the compliance, on paper, you have to applaud that. Because if you're able to improve the VAT compliance alone, it will rate way more than bringing new tax handles. We've seen how the new tax handles that the previous administration brought in underperformed. So it tells you that now we should focus on improving the compliance, and of course also removing the exemptions, the multiplicity of exemptions. So I think from the fiscal standpoint, the finance minister is trying to do the sensible things and try to plug the low-hanging fruit. The question for me is not this year's budget. The question is next year and the year after, when you are closer to the election. Well, historically, every government that comes to power, the first year they're able to really rein in the fiscal indiscipline.
Yeah, we saw it in 2017.
Sorry?
I'm saying we saw it in 2017.
Yes, so it's not something that's extremely new. Being able to keep within your finances in the first couple of years is something that we do. The main challenge comes when we are getting close to the election. That's usually where the problem is. So I think as far as this budget is concerned, well, how much they will achieve the growth projections. I think if you look at the fact that this year we are growing our target, we are performing our growth target, and it's all for all intents and purposes, it looks like we are going to end the year with growth rates upward of around 5%, and yet the projection for next year is still lower. It tells you that perhaps the finance minister is being modest and not promising too much, because they probably know that there might be some headwinds ahead of us.
Right.
So that being modest is good, but you have to look into the detail, whether all the things that they are planning to do, everything is mutually consistent. The one issue that I always raise has to do with the plan to cut imports, boost domestic production, and export, and the desire by the central bank, for whatever reason, to keep the cedi strong. I think that for me, that's always been a challenge, because you can't say you want to boost export production and then raise your currency, let your currency appreciate the way we have allowed the cedi to appreciate, and give it this incentive for exporters and incentive for importers. So I think that's going to be fascinating to see exactly how the fiscal and the monetary are going to balance this out. The song that has been sung in the first 9 months or so is coordination. But we have to understand that it's not just about achieving stability. The stability will come for nothing if ultimately it's not translating into production and then addressing the structural problems, the overdependence on imports. So I think that for me, that's going to be one of the things I'm going to look forward to seeing, whether the central bank is going to insist and keep on trying to pump dollars to strengthen the cedi. It achieves some positive things for us because we are import dependent. It will help us to bring down inflation, but it has.
Hello, Prof. Hello. I think we lost Prof there. Michael, can you still hear me, please? Hello, Michael.
Yes, I'm with you. Yeah, okay. I can hear you.
Yeah, then I think we lost Prof there. I'm sure we'll get him reconnected, and then we can continue the conversation. But Mike, Richard, so you heard Prof talk about the taxes and all of that, and I want us to focus on that for a few minutes. Maybe if you can, for the next few minutes, you can just break down the major tax reforms that we are going to see, and when it's going to even take place and all of that, what exactly is changing and what is being maintained and what is happening. Maybe if you can.
So tax issues sits in the budget is the VAT.
Yeah.
Right. That's what the finance minister has promised beginning of the year. So currently, this is our tax system. We have a decoupled system that we have our national health insurance levy. We have the Get Fund levy, and then we also have the COVID levy. Okay. The minister promised taking out the COVID levy. So how the taxing is this: you charge the levies, that is the 5% national health, the 5% the 5% Get Fund, and then 1% COVID. That's 6%. You charge it, and then you add it to the amount. That's the chargeable amount. So that amount of levy becomes part of the base upon which you're going to charge the VAT of the 15%. So in this case, there's going to be what we call the cascading effect. All right. So if you look at 2.5, 2.5, and 1, and then plus the 15 to 21, meanwhile, the effective rate is 21.9% because of how we arrange it. Now, this is what the finance minister is going to do. They are taking out the COVID levy. So now it's going to be only the 2.5, 5%. Now, it's also going to be decoupled. When you say it's going to be decoupled, it's going to be in this way, that when you charge it, the levies, okay, one, you'll be able to take it as an input tax or input deductible amount, okay, which was not so in the currently, which is also not so currently. So what it's going to be is that first, if you incur the 6%, or even if the levy is taken out and now the 5%, it becomes a cost to you. But from 2026, when government is able to pass the bill, the appropriation bill, and also be able to pass the amendment to the act and becomes a law, then when you spend the levies, you're going to be able to deduct it as an input deductible amount. So that's what it's going to be. So there's not much change, or there's not, though what is going to happen is going to bring a lot of effect, because first, there was about 6%, which was a cost to the producer or the seller and the consumer. Meanwhile, in 2026, it's no more going to be a cost. So it's going to be a lot of relief. And from the budget, government estimates 3.7 billion, putting it back. That's what the government means by putting back money into the pocket. So the COVID levy is going to go off. And also, per the definition of the arrangement of the decoupling, the levies are also not going to be a cost to the producer and also to the consumer, so long as the consumer passes on until the final consumer. So that's actually going to be.
Right. So we hear of the VAT thresholds being adjusted. What does that mean for SMEs? Who gains and who loses?
Okay, so that's another bit of the adjustment. Now, currently, if you make annual revenue, annual income, annual sales amount of 200,000 Ghana cedis, you have to register and charge for VAT. Okay. Now, it's going to go to 750,000 Ghana cedis. What it means is that the SMEs, the small businesses and co., what you will not be required to register for the VAT, because now the amount upon which you have to register has been increased. So if you're an SME and your annual revenue does not hit 750,000 Ghana cedis, then you will not be required. What also means that you are not going to put VAT on your service or your supply. So the prices of your goods are not going to be high. And when some people buy from you, the prices are also not going to be high compared to those who charge VAT. So what's going to happen is that the SMEs are going to have a bit of a push, that their prices is going to be low, and then they are also going to be much more patronized. But the effect is that the demand and supply. So the more your prices are low, you'll be getting more demand. Once you are getting more demand, it will pulling you into the bracket where you have to begin to charge the VAT.
So eventually you still come back.
So that's eventual. Anyway. But if you are not there, if you are not there yet within the years, 7 years, so
then the
petty traders and co, yes. I mean, those who have even improved their sales, their revenue, their performance, the bread sellers, the bakers and co. Yes, I mean 750,000 Ghana cedis annual revenue is quite a significant amount. So it will put a lot of them within under the threshold.
Now, historically, I know that when these thresholds are increased, or raised a bit higher, it helps businesses to comply to still have some room to do their business and all of that. So do you think we're going to see that realistically?
Yes, apart from government effort to push for compliance or to instill compliance, when taxes are low, generally compliance is low. If we check historically, if you check countries that have low taxes, the reason is when someone computes sells an amount to you, which is 100,000 Ghana cedis, and you make the payment and says, I'm going to pay about 21,000 or 22,000 Ghana cedis to government. Meanwhile, his profit is not up to the 22,000. It makes it difficult to pay. All right.
Yeah.
It may not be that the person has not taken the money. He has received the money. All right. So it makes it difficult. So, but if he sells 100,000 and he's come to pay even 5,000 to government, and his profit was 10,000, 15,000, it's easy to do that. So when the tax rate comes down, ordinarily, it increases the level of compliance.
Okay.
Because at times, one thing about paying of taxes, when anyone is going to pay taxes, especially PAYE or those personal income taxes and go, as soon as it comes to mind, I'm going to pay tax, he also even begin to check the amount I'm going to pay, the benefit I'm getting from government. The person say, my road is not good, this is not good, I'm not getting this, and I'm going to pay this huge amount I'm not going to pay. Or once the person, by any means, spends government money, going to pay back that government money is so difficult. Just imagine 20,000, going to pay 20,000 to government and going to pay back 5,000 or 2,000. Which one is easy to go and pay back? So even when you even spend government money and the amount is not so high, it's easy to go and pay, and therefore compliance will be high compared to when the rates are actually high. But we can say that 20% VAT is still not low compared to what is happening around the Africa, within the sub-region. I mean, but it's a good step. And the minister also promised that when the revenue goes up, we can even bring it to 19. And I say 19 is still not low when Nigeria is doing 7.5%.
But of course, I mean, Nigeria can boast of their numbers as well, and all of these things. But anyway,
your numbers call for your expenses.
Right. I know a higher threshold may lead to less overall VAT revenue collection, right, by the government. I mean, don't you think that could impact funding for public services?
Yes, increasing the threshold may reduce the revenue, but the question is that who are the most non-compliant? It's within the SMEs, the informal and co.
Right.
All right. So what actually going to say that I'm not even coming for the money. You still come and register. If you register, I'll get you on other tax types. So it may not necessarily mean leading to low revenue generation because before the increase, the level of non-compliance come from there. All right. So you are going to you are rather going to widen the net indirectly because their fear was, I'm going to do the registration and I'm going to have issue of VAT. VAT is high. My prices are going to go up. I'm not going to do. So now VAT, if the VAT is low and then the threshold is also high, then I will register for the other tax types. Then getting them, by so doing, you've gotten other tax revenue.
Okay, well, exactly 34 minutes after 9. This is a business breakfast on Z101.9 FM with me, Nitrebi Hammond. And this morning we're talking about the 2026 budget. We're trying to decode it, what exactly it means for businesses and households. If you've been following the conversation, we've had conversations on the tax aspect, and I know we're going to come back to that a lot more, Richard. Professor Assuming has also made some points in terms of the growth projections and all of these things that are associated with the budget. If you want to join the conversation, please feel free to send me a WhatsApp on 0544321019, 0544321019, and then I give you the opportunity to join the conversation. You can also call us on 03039566641, 03039566641, and then you can join the conversation. We're streaming live on Facebook at ZFMGH and also on YouTube at Z Multimedia. You can drop a comment on any of those platforms as well, and I'll read them for you. All right, let me come to Michael. Do we have Professor Assuming now? Hello, Prof. Hello.
Yes, good morning. Sorry, my line dropped off.
All right, great. Yeah, so I'll come back to you shortly. Let me go to Michael. And Michael, you are a chief finance officer. From a corporate finance standpoint, how does this budget affect the cost of doing businesses or cost of doing business generally going into 2026?
All right. So, as earlier indicated, you realize that one thing that businesses are a little bit scared of is taxes. I mean, especially if our exposures are very high, we tend to have many cause for concern. Now, with first and foremost, with the government taking out the 1% of the 19 levy, and also recoupling the Get Fund and NHIL with a standard VAT, making it 20%, and making the input tax deductible is very helpful to us as businesses in two ways. Number one, our cost of operations comes down because hitherto your input would be at 21.9%. However, you would only be able to recover 15% of it because that is what you are allowed to recover. The 6% goes to your cost. Now, although as a business, the 6% that goes to your cost at the end of the year, whatever you spend on is also deductible in calculating your CIT, but that happens at the end of the year. So in terms of cost, you would have borne the cost early on in the year before at the end of the year you have any hope of deducting it from your revenues to arrive at your bottom line profit and then have your tax calculated on it. The second thing is with cash flow. Again, the recoupling of the tax, and it's also recoupling of the tax to the standard VAT and allowing for the total 20% to be input tax deductible also helps us in our cash flow, because what it means is that at the end of every quarter, you are able to subtract your input VAT from your output VAT. So whatever, if you are VAT registered, whatever output VAT you charged to your customers, to your clients, and receive the 20%, in the end, whatever you have also paid out in the course of your operations through the procurement of your inputs and also payment for services, whatever you have also paid, you are able to take it out, knock it off. Then in the end, whatever is left, that is, if your output VAT is more than your input VAT, you only pay the differential to government.
Right.
And it is the opposite. Your input VAT being more, then you have a tax credit. So cash flow wise, it puts funds in our hands to be able to invest. And in pure finance, you would also realize that even between profit and cash flow, cash is always king, because you need cash to be able to keep on operating. You need cash to be able to buy your raw materials and continue producing. You need cash to be able to pay for your expenses and keep your business afloat. You need cash to be able to pay your workers' salaries for them to keep on working, for you. So this measure that actually improves our cash flow position is a good measure for us as businesses. Apart from lowering our cost, our cash flow is also improved, and it gives us more money to be able to invest into our business and keep the business growing.
All right. Hello.
Yeah. Again, for the SMEs, and those in sectors, those whose annual revenues may not be up to the threshold, because now the threshold has been moved to 750,000 cedis. It is good, but it highly depends on the model of the SME or that particular company.
How do you mean?
Because what I mean is this. You see, the advantage is this. The advantage is that, just as I was earlier mentioned, once you are not required to charge VAT, what it means is that you are selling your product.
Hello.
it competitively, yes, it makes you more competitive, gives you a competitive edge over your competitors who might be bigger firms and selling with tax or with VAT. Now you are selling at a lower price. So what it means is that many people will come and buy from you. But the other side of it is that because you are also not VAT registered, if your model, if the model of operation is that you buy a lot of your input or raw materials from big firms, which are charging you 21.9%, it means you are paying high cost for your raw materials and your services. And these costs, you are not allowed to deduct it. So you're not able to deduct it from your earnings, from your revenue, and it becomes cost to you as a business. But then if as a small business SME, you also deal with smaller businesses. So your inputs are from smaller companies, which are also not VAT registered, then you're fine. But then once you buy more from people who are VAT registered and they are charging you 21.9% and 20%, in addition to their gross amount, then you cannot deduct it. Cash flow wise, you may suffer, and cost wise, your cost may go.
Hello, Michael. Yes. Okay, so I get you, but so what you are saying is that in as much as it is good news for them, because they still have to be depending on the businesses that are charging VAT, it still affects them one way or the other. Is that what you're saying?
Yeah, that's what I'm saying. That if their model is that they deal with these businesses that charge them VAT, then they will suffer at the end because they'll not be able to deduct. But then if they can tweak their model in such a way that they'll be buying from other non-VAT registered, other smaller companies like them, then it means it will be in their favor. Yeah.
Okay. All right. Let me come to you, Prof. Now. Prof, we're talking about COVID-19 levy being removed and also VAT changes. Does that meaningfully boost consumption, or is it marginal?
Well, I think it could be substantial. Because the overall effect, as he said, is now when you go out there and buy, you're going to pay VAT of 20% instead of 21.9%. But for businesses' point of view, make a big difference. That discontinuation of the decoupling is a big deal, because now it means that what was not input deductible, the 2.5 and 2.5, the GET fund and NHIL, which had been decoupled and made straight levy. So it meant that businesses couldn't recover that expense. Now it's now back being part of the VAT. So it means that it's something that is input deductible. And I think for business point of view, that will significantly reduce the costs and the calculations. So I think it's at the individual level, you might think it's not much, but I think in terms of what it will do for businesses, I think that's going to have a big impact.
A big impact. Okay. Right. So, Prof, you hold on for me. Let me come back to Richard now. Now, Richard, so generally, do you think these reforms are going to widen the tax net, or maybe just increase the burden on existing taxpayers?
Yes, so as I said earlier, doing this, those that were scared earlier to register, they will come in. So you are going to widen the tax net. And then also doing this, because some were also not required, some even thought that the prices were high because of taxes. Now they are going to be less tax adverse. So you're also going to widen the tax net. So it's an opportunity for government to widen the tax net. But it doesn't end there. Having done this, you actually need to continue education. That's why it's good that the government has launched the continuous education when they were launching the various tax reform that they were bringing with GRA. So you have to actually continue with education. Other than that, you have reduced it, and then the impact is there, but they may not really know the real meaning of what you have actually done. And another advantage, if government is able to do that, to expand or to widen the tax net, the rippling effect for government, or another positive effect for government is that government is going to achieve an increase in corporate income tax. The budget for 2025, government could not achieve the target for corporate income tax. All right. Now, doing this why I'm saying this is that when you have recoupled the levies and you have taken out the COVID levy, what it's going to do is that now COVID levy alone was contributing 3.7 billion. So that amount was a cost, and it was a deductible cost. So this is going to add back to revenue, to profit. So 3.7 billion Ghana cedis, right? You have reduced the cost to the manufacturers, to the sellers, and also to consumers. But in the long run, what you're going to achieve is that is going to increase profit of 3.7 billion Ghana cedis, and that 3.7 billion average corporate income tax rate is 25%. So government will rake back almost a billion Ghana cedis. That is alone on the COVID levy. So when you also even go back to the other two levies, that two of them gives you 5%. Even let me do just a little extrapolation. That if 1% gave us 3.7 billion Ghana cedis, and is giving us a corporate income tax advantage of almost a billion, that's 900 million Ghana cedis. Then 5, if I multiply by 5, and then I'm sure I'm going to get an amount of around.
I'm not looking for anything.
I'm going to get amount around 5 billion Ghana cedis. So in the long run, although government has reduced the cost of doing business, has reduced the cost of consumption, government is going to benefit in the long run because profit is going to go up. Okay, I'm just looking at the basic level. Right. I'm not looking at I'm just looking at the other rippling effect. Profit is going to go up, and then corporate income tax is going to go up. But you'll be able to achieve this if you're able to do a lot more education and encourage more people to subscribe or register for VAT or to register for taxes.
So isn't it more like robbing Peter to pay Paul?
No, it is not. It is like investment. What government is reaping from investment. So it's not like robbing Peter to pay Paul. It's a natural effect of reducing cost of doing business. Okay. So if investors were going to spend 9 billion Ghana cedis as a cost, which is legally deductible expense. Okay, and now you are going to give it back to them. They are not going to spend that one as an expense. Then it means their profit is going to go up by 9 billion. So that 9 billion, your tax rate is 25%. So you also legally, you are legally entitled to 25% of that amount. And then you get back a little that amount you are also going to get. So it's not actually robbing Peter people. It's just what we call a rippling effect, a natural effect of what the decision the government is taking by reducing the taxes.
Okay, let me come back to Prof now. Prof, so I mean, we often hear tax reliefs, and we're talking about some of these things. We are usually excited about it. Do you think this budget actually puts more money in people's pockets?
Well, marginally yes, but I think that the surest way of putting money in people's pockets is creating jobs and people generating incomes. I think that's more of a surer way of putting money in people's pockets. We don't really want government going out and handing out freebies. Of course, there are certain specific people, vulnerable people who the government has to cater for. And I think it appears that the allocation for LEAP beneficiaries will go up. And I think that is good. But ultimately, what we want is create an environment where people are creating businesses, producing and creating and generating income. I think that's more of a sustainable way of saying we are putting money in people's pocket than trying to hand out freebies. Of course, we are not going to get tax exemptions all the time. You know, we should take the COVID levy as part of an original promise. Obviously, they've made a political promise and they have to fulfill it. But we should take it as just a one-time transfer. Subsequently, we are not going to get any more freebies. So the main thing is, get the economy to create jobs, grow and create jobs and generate incomes.
But do you foresee the introduction of new taxes maybe in the recent future?
there will be tweaking of the new taxes. Remember, the finance minister spoke about not just the VAT reforms, but he says going forward in 2027 and beyond, they are going to reform the income tax. They are going to reform the other tax, all the other core tax handles. The finance minister said they are going to reform them. The question is, you suspect that maybe some people's rates might go up, but as for new indirect tax handles, I don't see one coming anytime soon. But you never know. We got a shock with the fuel levy, right?
Exactly.
So you can never tell. But I think bringing new tax handles, so I'm excited that they are going to reform the income tax regime as well, because that way you can also plug some loopholes and improve the collection, and that will help to broaden the base. When we talk about broadening the base, I'm not so sure that indirect tax necessarily broaden the base, because VAT, everybody is paying. Whether you are getting whatever you do, you are paying.
Yeah.
So, but when we are talking about people who are earning incomes, very good incomes, and are not paying income tax, payee, or people who are earning properties and are not paying. So I think that's where I'm hoping that the reforms will target, so that going forward we begin to see more areas. I mean, one of my biggest disappointments was that the road tolls didn't come back. I was very surprised, because in the when the budget was read for 2025 in March, the finance minister made a definitive statement.
Yeah.
Paragraph 277, that this year they are going to introduce the road tolls. Not only has it not been done, in the 2026 budget, it wasn't mentioned at all. So I just wonder.
Yeah,
because if you look at our major trunk roads, you have all these heavily loaded cars breaking down the road and overloaded in some instances, transporting goods up there. And then how are we going to maintain these roads if you are not paying the tolls? So I really wish that the road tolls had been brought back, but here we are. Maybe it's not so popular a thing to say, saying that I should calling for Ghanaians to be made to pay road tolls, but really, I think if we are not paying the tolls, we are going to pay it elsewhere. So we better face up to it.
I see. All right. So our time is up and we have to go. Maybe I'll just take some final thoughts from you, but maybe by way of questioning. So I'll start with you, Richard, in studio. So what should businesses do immediately to stay compliant under the new tax environment?
Okay. So actions to take compliance is very critical. I mean, very crucial. If you look at the budget, okay, government is going to raise a lot of revenue internally. And then if you check it as well, government intends to strengthen the compliance push. All right. If you check the GRA, the Commissioner General is coming from an audit background. Last week, there was appointment of a Commissioner of DTLD. He's also from audit. So what is going to actually happen is that you have two who are going to spearhead revenue generation for government, and they are all from audit background. So what it's going to mean is that the audits or the approach of GRA to raise revenue is going to be much more audit-centric.
Okay.
So you have no option than to be compliant. So it also means that if you had other areas that you are not compliant, you really have to do your tax health check. You need to check it and then get advice and then be compliant. Other than that, Ghana, our penalty or the interest regime, our penalty regime is not punitive like other countries I've seen. But our interest regime is very punitive. Okay, 125% of the statutory rate compounding monthly. And from experience, within 14 months, interest exceeds principal. All right, so you have no option than to be compliant. So government is going to relieve your burden. So you have to also take another step of making sure that you are compliant. Other than that, the burden that government relieves is going to be overburdened through your non-compliance. Actually, the government have even seen that there's about $30 billion that were transferred out of the country, there were no importation of goods attached to it. Government is going to look for all this. And if it was you, or if you are the one doing that, it means that either government blocks it or government goes back. Government has up to 6 years to go back and do audit. Within for VAT 3 years, okay. All right. So they can actually go back, check it, all right, and either audit you or reassess you, and you are going to actually pay. So compliance is should be one of the key things in
Businesses
our
should do.
part of the world. That compliance at times is pushed to the is just pushed to the back or not on the hot burner. But other parts of the world, compliance is critical because it affects the going concern of a business.
Right. Okay. Thank you very much. Let me come to Michael and then I end with Prof. Mike, so you are in the business space already. You can talk to your your business, other businesses who are listening to us this morning, or business owners who are listening to us this morning.
Yeah, all right. So thank you. So what I would want to say is that business owners, entrepreneurs should be looking at taking advantage of the current low level of commercial lending rate and get funds, go in for funds, investment funds, and take advantage of these reforms and invest them into their operations. Once they have identified viable business projects, invest them into their operations in order to boost their revenues and overall boost their profitability as well. And also, just as it's also been said, the government is also looking at trying to enforce compliance, you understand, by bringing innovative ways of administering its taxes. Therefore, I would really urge all businesses to keep an eye on their records, their VAT records, ensure that they issue their VAT invoices, they file regularly to avoid attracting penalties, which would also in the end increase their cost. And do the computation right. Once the dedication is done, you know how to compute it. Do the computation right. Claim your VAT goods as much as possible in order to have cash flow and to put into the business once again.
Right.
So,
okay.
That's my advice.
All right. Thank you very much. And then finally, Prof. So for households who are listening to us, what should they prioritize in 2026 as they navigate these reforms?
Well, I think, the intentions of the government are clear. What I think we should be doing, and I hope the government will do more, is lead the way. Let us all patronize Ghana. Let us patronize made in Ghana. And let us understand that if we follow that we all want cheap things or things that are relatively cheaper, we are hurting ourselves because we are exporting our jobs. Every time we buy import or we engage in smuggling, we are hurting our own selves. So I think that as much as we all cherish that the currency is strengthening and therefore things that we are importing look cheaper, we should always keep that in mind, that every time we buy foreign, we are exporting jobs. And it's good to come back to hit that. That's what I want to end with.
All right. Prof, thank you very much. Really grateful that you joined us this morning for this conversation. That was Professor Patrick Opoku Assuming. Is an economist and senior lecturer at the University of Ghana Business School. And I was also joined in studio by Richard Amohini. He is a tax analyst. And then Mr. Michael Sego. He is a chief financial officer. And these are the three individuals who made time to join me this morning. Big thank you to all of you for making time. Really, really grateful to you for helping us unpack the 2026 budget this morning. And to you who listen to us, we hope today's conversation gives you clarity on how these reforms actually affect your businesses, your finances, and also your daily life. And I hope that you are able to take advantage of this particular tax environment in this season. Well, this is how we wrap up today on the Business Breakfast on Z101.9 FM with me, Nitrebi Hammond. We're back again tomorrow for more interesting conversations. Until then, please keep listening to Z101.9 FM. And make sure that when you think Ghana, you actually think Z. Up next is an inspiring story from the Rise Up Bring project, which is working to strengthen rural communities